Ladies and gentlemen, have you heard of the Pi Cycle indicator? An indicator people use to predict Bitcoin tops, and a big argument that people are using right now to say that the Bitcoin top is not in. Have you heard of the 200-week SMA and how the 200-week SMA relates to the last cycle's all-time high in predicting this cycle's all-time high? People as well are using that indicator to say that the top is not quite in yet. People are also saying that there was a trend on Bitcoin, that it took roughly around 1,200 days from the all-time high to breaking that all-time high in order to maintain cyclical structure. They're saying that because this cycle only took about 900 days, the top is probably not in yet because the cycle is broken. There are also people saying that because we didn't see a clear altcoin season, the cycle has to be broken and we can't have seen the top yet. What if I told you that all of these four arguments, which are used by many crypto YouTubers, are simply bad arguments? It's not good data. And what if I told you that there's actual data, real data, strong data we can use instead as replacements for all of these arguments? Now, this video is not, me sitting here saying that the top is certainly in and I'm macro bearish and everything's going to crash. I'm not saying that. I'm saying that there is good data and there is bad data. And the arguments I just showed you are all bad. Before we dive into why, go ahead and check out the Bitunix Exchange. Everyone needs an exchange, whether you're buying, you're selling, you're holding, you're staking, you're trading futures. You need a place to do it, and that's why exchanges exist. Now, obviously, there's terrible exchanges in the market, and there's big exchanges which people think are really good, but actually are very unsafe. They get hacked all the time. People lose their money on exchanges all the time. Bitunix is a solve for that. It's global, it's non-KYC, so you have no issues accessing it from wherever you are in the world, no regulatory issues at the moment. It's also never been hacked before, which is a big deal, okay? So historically, very safe, been on the market for 4 years. Use my referral link down below to sign up with just an email address and a password. Exclusively with that referral link, not only will you help out the channel, but you also get a 15% lifetime trading fee discount. So every single trade you make will be discounted by 15% exclusively with my referral link below. Go ahead and use it to help out the channel, help out yourself. Let's get into the content. Let's move through it systematically here. Let's go through the 4 separate indicators and tools that I mentioned at the start of the video and explain why they are bad, and then bring up replacement tools that are actually good, that are actually useful. First and foremost is the Pi Cycle indicator. It's a very well-known indicator, probably the most well-known indicator in Bitcoin top prediction history. Everyone talks about Pi Cycle, and it worked for a long period of time. It worked in 2014. And basically what the Pi Cycle indicator is, if we're just getting really reductive, there's the signal line and there's the trigger line. And basically, when the red line crosses above the yellow line, that marks that a top is very close. So let's just mark out when that has occurred historically speaking. It occurred right there in 2013, as you can see, very close to the top. It occurred roughly over here in 2018, 2017, very close to the top. It occurred in the first half of 2021, very close to the top. The reason why this indicator doesn't work, in my view, anymore is because, well, actually, if we look closer into the data here, it didn't really mark the 2021 top, because the 2021 top wasn't actually in the first half of the year. The 2021 top was in the second half of the year. And people say, oh, it was a double top anyway, who cares? But yeah, look, okay, I understand that argument. I don't think it was a double top. Bitcoin moved upwards, an extra 10% from 63,000 to 69,000. That's a pretty significant move. It's not something you can just brush off. The total cryptocurrency market cap moved upwards from the first half, the first top, to the second top, 19%. You're brushing off a change in value of $500 billion of the total cryptocurrency market cap and calling it a double top. I think that's extremely irrational. And if we're talking about Ethereum, you're brushing off the second blow off top, which went up an extra 13%. So altcoins went much, much higher. The total cryptocurrency market cap went almost 20% higher. And Bitcoin itself went 10% higher. Not only that, but the top in late 2021 was, quote unquote, the real top as per the 4-year cycle's date range trends. The date range trends of the 4-year cycle always said the top would be in Q4 of 2021, not in Q2 or Q1. And that's further validated by the fact that the bear market bottom of 2022 followed perfectly from the bear market top of Q4 2021, and we can go further. The point is, the Pi cycle didn't actually work in 2021 in marking the cyclical top. It only worked in marking a macro high. And when it comes to marking macro highs, well, that's not really what we're looking for. We're looking for top evidence here. And even just on a structural level, the only times this indicator has clearly worked is when we've seen clear V-shaped tops, which fits the structure of the moving averages that are used to predict the tops of the Pi cycle anyway. The problem with 2021 is we've rounded out. This whole cycle, guys, has been a rounding out cycle. We haven't seen V-shaped move. It's been move upwards, round out, move upwards, round out, move upwards, round out. The structure of this cycle is not cohesive with the structure of how Pi cycle has historically worked. So I don't expect it to work this cycle. And if it does work this cycle, it would mean a break of the 4-year cycle, because the Pi cycle is, by the way, nowhere near top. We're no closer to marking a Pi cycle top right now than we were in 2022. We need to see a sharp V-shaped move for this indicator to trigger once again. So it's not good data. The second argument people use, the second piece of data people use, is the 200-week moving average. Previously a very important indicator for Bitcoin. It was never lost for a long period of time. I discussed it many times on this YouTube channel back in the early days. It's gotten a bit messy over time. Not really an important indicator anymore, quite frankly. But something people have done with the 200-week SMA is they've drawn a horizontal line where cyclical highs have been. And what they've noticed is that when that all-time high is crossed by the 200-week SMA, that's when we see the top of the next cycle. That happened and worked in 2017. And it also seemed to have worked, as you can see, there's the all-time high, in 2021, although it wasn't exactly clear. I mean, to be fair, it marked the top after the breakdown, about a month after it actually occurred. So vaguely, this indicator has kind of worked. Again, there was like a 2-month margin for error in 2021. And people are saying, well, we haven't crossed above the prior all-time high with the 200-week SMA yet, and therefore the top can't be in. Now, when would that occur? Well, let's just go ahead and extrapolate it forward. It'd probably happen around mid to late 2026, perhaps, maybe a little bit earlier than that, maybe mid-2026. That's ages away, okay? And if that was to occur, that would be a break of the cycle. So we have to wonder, it's like, well, what's more important to us? What's stronger? An indicator that has worked perfectly once and kind of worked another time. 2 data points, one of them worked, one of them didn't really, kind of did. Or the entire 4-year cycle, right? Of course, this is pretty bad data. We can react to it at the time, but right now it's not something we should be prioritizing. It's certainly not an argument we can use to debunk the rest of the data. Especially considering, in the meantime, the 200-week SMA has lost importance. It's one thing that the 200-week SMA worked for predicting tops and also for support and resistance back in the day. Ever since then, it's been pretty much an irrelevant indicator. We just jumped up and below it for like a year on end right there. So that's what we have between the last data point and now. We have evidence that the 200-week has become irrelevant. This is not a strong indicator. Many people are saying the cycle is definitely broken because there was a developing trend, or maybe even a coincidence, that there was about 1,200 days between the all-time high of the price cycle and the break of that all-time high, right? This was an established thing, 1,100 to 1,200 days. But actually, no, it wasn't really established. And I'll tell you why. Well, it wasn't established because that only happened twice, and 2 data points is not a mathematical trend. Need I elaborate? I don't think so. But I will. It also is clear that trends like this would seem to form over time because we are in a broader cycle, and the cycle does have date range targets that it has met 100% of the time. So this is not an isolated trend, even if it did ever exist, which I don't think it really did exist. It's part of the broader cycle that people are using to say the cycle is broken, which doesn't make sense because it's part of the cycle. It's a result of the cycle. And the third thing people will say is, well, how could we have seen a top if we never saw an altcoin season? And my argument to that is, well, the cycle was never based on altcoin seasons. It was based purely on when Bitcoin tops and bottoms and when the halving occurs. So it's an irrelevant argument to begin with. Second of all, we've only seen 2 examples of altcoin seasons historically. 3 data points are needed to create a mathematical trend. So there was no trend saying we had to see altcoin seasons. It's just generally what happened. And thirdly, even within the altcoin seasons we have seen, 2 of them, which is not many, they were vastly different in structure. Okay, 2017 was straight down. 2021 was straight down and then sideways on Bitcoin dominance until the end of the cycle 6 months later. Dramatically different in structure. There was no trend to begin with that altcoins needed to do anything in particular. And even when they did do the same thing, when we saw altcoin seasons in both 2017 and 2021, the altcoin season behaved very, very differently. So this is not a strong argument either. All of these points that people bring up relentlessly on crypto YouTube and crypto Twitter as the reasons why the top's not in yet, reasons why we haven't seen X, Y, and Z yet. It's just weak data. It doesn't mean the top's certainly, in. It doesn't mean that I'm macro bearish definitively or anything like that. I'm just pointing out bad arguments when I see them. You need to use solid data. And what is the solid data right now? We can look into that. I'll give you three examples. One of them is the 2-week chart RSI. This is solid data. 2-week chart RSI, we can draw a simple resistance line which has marked every macro top in Bitcoin's entire existence to a 100% degree of failure. We can also mark a clear triangle formation, which is clearly a point of contention right now as we speak. I've been mentioning this as the critical breakout point to upside and downside on the Bitcoin price on the medium term and long term for months now. This is an infallible chart, okay? It has not been broken yet. Everything on this chart makes perfect sense. That's good data. The logarithmic regression channel. Angles of elevation between bottoms and tops of each cycle. The angle of elevation halves each cycle. This has been acting as resistance and with support on clean cyclical levels for bear market tops and bear market bottoms. It's never been broken. It's been rejected from this cycle so far. And it's perfect. That is good data. The 4-year cycle itself, 100% accuracy. The date range trend has never failed. It's an umbrella trend comprised of 6 micro trends, which again, at this point, has never been broken. That is good data. Now, these 3 things, they can change, okay? Because the fact of the matter is, okay, at one point, the Pi cycle indicator was the good data as well, but things change and you need to adapt. And the problem with people who keep bringing up these arguments is they haven't adapted to how the market has changed. The market is not the same it was in 2021 and 2022. It's not even the same it was in 2023 before ETFs, okay? This is a different market environment and you need to use different indicators that fit the current market environment. Thank you for watching, guys. I really hope you enjoyed the video. I want to make a note here. My upload frequency in November is going to be lowered for logistical reasons that have long been planned. Please bear with me. I'll get videos out when I can. It'll probably be like 2 times, maybe 3 times a week for the entirety of November. Unfortunately, that's just how it's going to have to be. I'll try cover as much as I can in those videos, though. I appreciate your support. Go ahead and check out the Bitunix Exchange. It's the best way you can support the channel. Just using that referral link down below to sign up, you'll get a 15% lifetime trading fee discount on this exchange. It's a brilliant exchange. I wouldn't be talking about it if it wasn't. It's global. You'll have no problems no matter where you are accessing this. It's non-KYC. It's never been hacked before. I don't advertise things that have been hacked in any serious way, and this hasn't. So use my link down below to sign up. 15% lifetime discount. I'll catch you guys soon.